Good morning, everyone. As a member bank of the Federal Home Loan Bank of New York, I am pleased to welcome Jose Gonzalez to the Hudson Valley and to our stage as the first keynote speaker of the morning. The Federal Home Loan Bank of New York is the bank's bank. Part of their mission as a bank is to promote and advance community and economic development, as well as supporting affordable housing. The Federal Home Loan Bank has provided millions of dollars throughout the Hudson Valley in support of both home ownership and rental housing development. Jose Gonzalez is the new president and CEO of the Federal Home Loan Bank of New York, a position he has held since April of this year. Jose joined the Federal Home Loan Bank of New York in October 2013 as its executive vice president. Prior to joining the Federal Home Loan Bank, he served on its board of directors as a member director for nearly a decade, including serving as the board's vice chairman from 2008 through 2013. Jose has more than 30 years of banking experience, serving in the role of CEO and president for Credit Suisse First Boston, Puerto Rico operations, the Government Development Bank for Puerto Rico, and Santander Bancorp. Jose is past president of both the Puerto Rico Bankers Association and the Securities Industry Association of Puerto Rico. He received his undergraduate degree in economics from Yale University and MBA and JD degrees from Harvard University. Please join me in welcoming Jose Gonzalez.
Thank you, Mike, for your introduction, and thank you, Joe, and the Hudson Valley Pattern for Progress for inviting me to speak here today. Let me also recognize among you, there are those who've served the Federal Home Loan Bank also on our Affordable Housing Advisory Council. For example, Kevin O'Connor, who's around here, who's served on that council for 9 years. The housing organizations also, in addition to the banks, are an integral part of our mission and help us develop our mission, particularly through our Affordable Housing Advisory Council. Their guidance, your guidance, and the contributions of so many of our housing partners helps the Federal Home Loan Bank of New York act as a strong and reliable partner for New York's affordable housing community. I appreciate the opportunity to discuss how our cooperative continues to help build the housing the entire state needs. And affordable housing, I don't have to tell you, is truly needed in New York. Earlier this month, I was up in Lake Placid to speak at the Independent Bankers Association of New York, the New York State's annual convention. And this morning, I have the pleasure, of course, of visiting the beautiful Hudson Valley. Not just this morning, I spent the weekend, a spectacular weekend around the Hudson Valley, getting to know your counties and your sites. Our offices are located in Manhattan, but the 206 New York-based members of our co-op are located all over the state. And whether upstate or downstate, in Westchester or Western New York, in the city or the suburb, rural setting or urban centers, the need for more affordable housing in our communities connects all New Yorkers. Everyone in this room is working to meet that need, and the Home Loan Bank is proud to be able to offer our support. That support is most evident in our affordable housing program, through which we have awarded more than $45 million in grants to 140 housing initiatives, helping create or preserve more than 5,700 affordable homes here in the Hudson Valley alone. To explain where that funding comes from, allow me to provide a brief overview of our business. The Federal Home Loan Bank of New York is part of the congressionally chartered nationwide Federal Home Loan Bank system, which was created in 1932 to provide a flexible source of funding and liquidity for members engaged in home mortgage and neighborhood lending. Today, the 12 home loan banks that comprise the system serve as the main provider of liquidity to the nation's local lenders of all sizes, shapes, and forms. Not just commercial banks, but also savings banks, stock banks and mutual banks, credit unions, insurance companies, and community development financial institutions. The membership is a very diverse membership, and we are a cooperative owned by our members. In the district, more than 330 local lenders of all types and sizes in New York, New Jersey, Puerto Rico, and the U.S. Virgin Islands. And as I said, our members include commercial banks, savings banks, credit unions, insurance companies, and community development financial institutions. It is our mission with our members to advance housing opportunity and local community development by maximizing these members' service to their markets. We do this by providing our members with access to credit through the form of advances, which our members use to invest in their communities and make the home and small business loans that provide stability and drive growth. The money we put into the Affordable Housing Program, or AHP, grants comes from our earnings and is directly related to our performance. In other words, the better we perform, the more money we have to distribute in to our AHP program. And I can report that the Federal Home Loan Bank of New York is doing very well. In the first 6 months of 2014, we earned more than $150 million in net income. And at the end of the second quarter, we had $127.8 billion in total assets and $6.7 billion in total capital, with our advances to our members in the district standing at $96.8 billion. That means that through our members, we have nearly $100 billion being put to work in communities across our region. Our function is to provide liquidity, but our focus is on improving the housing and economic opportunities available to families and communities throughout our district. Through our housing and community lending programs, our members have access to the financing tools essential for creating a more prosperous environment in the communities they serve. And through our affordable housing program, we have our most direct tool for impacting housing opportunities. The Affordable Housing Program has provided grants each year since 1990, when we began setting aside 10% of our earnings to support the creation and preservation of housing for lower-income families and individuals through our competitive grant program. AHP funds are awarded to members who submit applications on behalf of project sponsors who are planning to purchase, rehabilitate, or construct affordable housing. It is that member involvement, our members serving as sponsors for housing organizations, that makes the program so successful. Our members are active in their communities, they know the housing needs of the neighborhoods they serve, and already have strong relationships with the housing organizations working to strengthen these neighborhoods. In fact, several of our members are represented on Patterns for Progress's board of directors: Rhinebeck Bank, M&T Bank, Ulster Savings Bank, and Sterling National Bank. Other institutions such as TD Bank are present here and are also active in your organization. Through the 4 members alone, that over the years we have awarded nearly $90 million to 260 projects, which have helped create or preserved 11,800 units of housing. And our overall contributions through the AHP are even more significant. Since 1990, we have partnered with our members to award 1,380 grants totaling nearly $500 million to help create or preserve nearly 60,000 affordable homes. More than 37,000 of those homes are in New York State, where we have awarded $291 million in grants to 860 initiatives. Our AHP grant is usually not the largest piece of funding for a project, but it is often that vital piece of gap financing that helps meet the project's funding needs. The AHP program works because it supports the strong partnerships that exist between community-focused lenders, nonprofit housing organizations, dedicated developers, and elected officials at the city, state, and federal levels, all working together to develop affordable housing. Building high-quality affordable housing is the work of many hands, but it is also work that faces many challenges. There are, of course, macro challenges, such as the overall weak economic environment and continued weakness in the housing sector. And there are more specific challenges as well. My predecessor at the bank, Al Delibovi, who serves on the Bipartisan Policy Center's Housing Commission in Washington, D.C., was a significant contributor to the Commission's 2013 report on housing. And as that report found, the U.S. government spends $180 billion annually on housing through direct appropriations and tax subsidies, yet only 27% of that goes to support low-income renters. So there are strains on funding and on resources, and there are challenges presented by the lack of space to build new construction, especially in urban centers. But affordable housing community is innovative. One of the most exciting innovations in recent years has been the concept of adaptive reuse. The Pattern for Progress has focused on this concept in this year's annual report. It's also something we have seen more and more in our AHP applications in recent years. Over the past 3 years, nearly a quarter of our AHP grants have gone to adaptive reuse projects, a total of $27 million for 43 grants. Two of these projects are right here in the Hudson Valley. In Middletown, the Mill at Middletown project will transform an abandoned 1870s mill into 42 affordable apartments for working families and homeless individuals and households. Earlier this year, we announced that the Home Loan Bank had partnered with Walden Savings Bank to award the project $820,000 in an AHP grant. And we recently hit the one-year anniversary of the groundbreaking of Schoolhouse Terrace at Croton Heights, a $58 million development that will include mixed-income apartments for 121 families and seniors. The development is on the site of former Public School 6, a dilapidated and neglected school building in Yonkers. In 2012, we joined with M&T Bank to award a $1.3 million AHP grant to this project. Similar initiatives are meeting with success all across the state. In the South Bronx, Villa Verde rises out of a formerly vacant strip of land, serving a range of income levels by providing 151 rental apartments affordable to low-income households and 71 co-ops affordable to middle-income households. In Batavia, the Jerome Senior Apartments offer 55 units of senior housing located in what had been an empty section of a former hospital. The site is now in the middle of the United Memorial Jerome Center, providing its senior residents with easy access to health care. And in the heart of downtown Plattsburgh, where the former Seton Catholic Academy building once sat empty, Catherine Gardens now provides 31 affordable homes for low-income families. $2.75 million in AHP grants helped to repurpose these spaces, and we are proud of our role in supporting this housing. Because taking vacant or underutilized spaces and turning them into residences does not just meet the need of creating affordable housing, it improves neighborhoods as well. Vacant buildings create blight and threaten to drag down the surrounding community. As vacancies increase, so too does crime and neglect. Property values decrease, businesses exit, and investments in the area dry up. But when those vacant buildings are transformed, the effects of the surrounding areas is transformative. Analysis indicates that those 43 adaptive reuse projects we've supported over the past 3 years have brought an estimated $575 million in related spending in those communities, creating jobs, sustaining local business, and improving neighborhoods. So adaptive reuse is a driving force of revitalization in communities across New York and across the nation. Access to quality affordable housing has the ability to stabilize communities all across the state. I think, for example, of the Fruit Belt neighborhood in Buffalo. Blight and crime took their toll on the neighborhood, but over the past decade, the area is experiencing a revival. In 2005, the Home Loan Bank awarded a $151,000 AHP grant to the St. John Fruit Belt Development Corporation to help construct 28 townhouses for low-income families. In 2007, the organization received an additional $84,000 grant. And earlier this year, we announced an $857,500 grant to AHP grant for the project for phase 2 of the project, which would bring 49 townhouses units to 22 buildings in 17 sites across the neighborhood. They're doing great work in the Fruit Belt, and we have been proud that our AHP program continues to be a stable source of grant funding along the way. By the way, for those of you who do not know Joe Gallo, who's here with me, he's the Vice President and Community Investment Officer of the bank. Please stand up, Joe. And he is the person who, for more than 20 years, has led the AHP program at the bank and is very well known to many of you and to most of our member institutions, but is the person who can answer any and all questions regarding how we do the AHP grants and how we contribute to your activities through our program. But the AHP program is not our only tool to directly support housing. If you will, the AHP program is sort of our wholesale program, focused on multifamily affordable housing activities. It takes about 2/3 of our grant budget. We also have a retail program, if you will, directed to individual homeowners, which we call the First Home Club. And the First Home Club was created in 1995, and it offers an incentive for households with incomes at or below 80% of the area median income to save towards the purchase of a new home. The First Home Club provides down payment and closing cost assistance by granting $4 in matching funds for each dollar that participants save in a dedicated account, offering up to $7,500 in matching funds to first-time home buyers purchasing a home through one of our members. Participation is also through the sponsorship of one of our members, who is the institution who, together with us, is in charge of providing financial education and savings support for the families. Since the program's inception, we have provided nearly $60 million in subsidies to help fund the purchase of almost 8,800 new homes, including more than 1,000 new homes here in the Hudson Valley region. One of the requirements of the program is that participants receive counseling on purchasing a home, counseling related to savings, to budgeting, to maintaining a home, just to all the responsibilities of being a homeowner. We believe that one of the best ways to ensure that we are building stronger communities is by providing these first-time home buyers with the support and information they need to purchase a suitable, affordable home. This belief is supported by statistics, of course. At last check, the foreclosure rate for program participants, the last line on the page there, who are often very low-income households, hovered around 0.5%. So a very, very low foreclosure statistic, a very successful homeownership program. In addition to the AHP program and to the First-Time Homebuyers Club, we also have community lending programs through our members. Earlier, I noted how our advances provide members with access to credit beyond the resources they can pull from your communities. These advances also provide members with the opportunity to support community-focused projects. Our community lending programs provide a reliable source of funding at our lowest advance rates for projects that our members bring to us, which relate to housing, improving business district, and strengthening neighborhoods. With respect to this program, in the Hudson Valley region, our membership has a strong presence, with 33 of our members chartered in one of the 9 counties in your organization's region, and many more, of course, operating branches within the region who are chartered outside the region. But just looking at the 33 member institutions chartered in the Hudson Valley, those members had $1.5 billion in advances at the end of August, an increase of nearly $500 million since the end of 2013. In the region, in the Hudson Valley region, These members have taken advantage of the programs, of the community lending programs, to the tune of $660 million, more than $500 million specifically targeted to community lending and being put to use providing housing for moderate-income households, building industrial and commercial facilities, and nurturing small businesses. As our economy continues its too slow recovery, and we all wish it was a stronger recovery, but it's improving, I think. Local lenders continue to responsibly meet the needs of the communities they serve. Communities rely on their local lenders for the loans that provide homes to our families, send our children to college, and allow our small businesses to expand. And those local lenders, in turn, rely on the Federal Home Loan Bank. This is a type of lending, the type of lending we support through our advances in our programs that drives growth at the local level and which ultimately get our economy back on the right track. And just as communities rely on their local lenders, these local lenders rely, as I said, on the Home Loan Bank. Everything I have spoken about today, from our affordable housing program to our First Home Club, to the $100 billion in funding we make available each and every day to our members in the district, is made possible by a stable and reliable Federal Home Loan Bank system, comprised of a strong and diverse membership. Some worry, however, that stability may now be threatened. Earlier this month, the Federal Home Loan Bank System's regulator, we also have a regulator, the Federal Housing Finance Agency, issued a proposed regulation that, if approved, could create a potential barrier to the advances and liquidity resources that each home loan bank provides to its membership. Based on the systems, and this is nationwide, systems initial estimates, the FHFA proposal could have eliminated some $60 billion and as much as $350 billion of borrowing capacity from the U.S. financial system over the last 5 years. This action would seem to run counter to our housing goals. Fewer advances means less liquidity flowing through communities. And fewer advances also means lower income for the Federal Home Loan Banks, which means a smaller pool from which to provide grant funding. Our members benefit from a strong and reliable home loan bank, and that is at the center of our franchise value. And our communities benefit from local lenders who have access to the home loan bank funding. We're currently analyzing the full effects of the proposed regulation, and when we have completed our analysis, we will communicate its ramifications to our membership and our housing partners. Because all of you, of course, are stakeholders in this system. It is important that as stakeholders in the system, we continue to work together to make sure that regulations do not put another unnecessary burdens on New York's affordable housing needs. In closing, we're all in this together. Providing high-quality, affordable housing to all who need it is the goal of everyone in this room. We're proud to be your partner in your efforts, and I encourage you to work with your local lenders, many of them present here, to ensure that our funds and our housing programs continue to make an impact in the Hudson Valley region. All across New York, we're seeing increased demand for AHP funding and for larger subsidy amounts. We are on pace to set new records in 2014 for new household enrollments in our First Home Club, as well as the number of families closing on their first home with First Home Club assistance. Housing drives growth, and affordable housing strengthens communities. From Manhattan to the Hudson Valley and on to the Fruit Belt and Plattsburgh, we all call New York home. Let's continue to work to keep our homes strong. Thank you for inviting me this morning.